Hey, what is up everybody? Jason here and you're watching my channel Micro Investor. So in this video, we're going to be talking about one of my favorite topics to talk about, and that is the whole EV industry. And we're going to be talking about the charging network stocks, Chargepoint, which is going to go public through a SPAC merger with Switchback Energy, currently trading under the ticker symbol SBE, and Blink Charging, ticker symbol BLNK. Now, for Chargepoint, for everybody that has been investing into Switchback Energy, to get a head start on investing into Chargepoint pre-merger and getting in early, that stock has been doing really well. Now, the same thing for Blink Charging. Recently, Blink Charging has just seen a really good run, and that stock has gone up quite a bit. Now, I've made videos talking about both these stocks individually, and I think that there's great things about both of them that they do offer. Now, we do know that Chargepoint does have a much larger charging network, but there recently was an attack onto Blink Charging through a tweet by the short sellers, Citron Research. Now, you might be familiar with these guys. They recently made a report about NIO, and well, that didn't really go too well because NIO stock did end up going back up pretty high after the report. But we'll address the recent tweet that Citron Research made about Blink Charging and talk about both these stocks in general. Now, nothing I say in this video is meant to be any sort of financial advice. I just share my own opinions, and this is all for entertainment purposes only. But if anything I say does help you and you would like to help out this channel, I do have a Patreon. The link is in the description, and that does help go a long way. But you can always help out by simply just smashing, destroying, and annihilating that like button, because it does help me out the YouTube algorithm, and it helps spread my videos to more people that might find them interesting. And also, as always, subscribe if you have not already. All right, now let's get into this. Now, from the time of filming this, if we look back at Blink stock over the last week, the stock is up 107%. And that's after, even with Blink stock being down at the date of filming this on November 24th, where it's down 16%. And the reason why Blink stock is down on this day is because there was a tweet that was made by short sellers Citron Research that said, "New most ridiculous EV stock is ticker symbol BLNK. No money for research and development. Management accused of security fraud. No real revenues. Expect a massively diluted deal soon so management can continue to deceive public. This should trade right back to $10 where it is still overpriced. Total scheme." And then they followed up that tweet with another one that said, "For all Blink investors who are naive, for same market cap of Blink, you can buy Chargepoint, ticker symbol SBE, with 73% market share. Considering market penetration, Blink should be at $1 per share. Consider SBE spent $70 million on research and development, and Blink $0. And then Citron followed that up with a third tweet that said, "Blink has made no progress expanding downloads or network in years. A total commodity product with no brand. It is an insult to other EV makers to even mention Blink as an EV stock. Lowest form of shareholder base. This is a $1 billion joke." Now, since they're saying basically buy Chargepoint over Blink, let's take a look at SBE stock. So November 24th, when Blink stock is down, SBE stock is up over 8%. And if we look at SBE stock over the last week, their stock is up close to 80%. Now, I personally do like Chargepoint more than I like Blink stock, but that doesn't mean that I think that there's anything really wrong with Blink. Now, I just like Chargepoint more just because Chargepoint does have a much larger infrastructure investment. They're not just in the United States, they're also over in Europe as well. And that's one of the main things that I really like about them. Now, let's be real here. Citron Research is a guy named Andrew Left, who is a short seller, and his job is basically to profit off of stocks going down. His job is basically to get people to help make that stock go down so he can short the stock for profit. That's the entire business model of Citron Research. Now, I'm familiar with this company quite well because I've made a lot of money actually doing the exact opposite of what Andrew Left says, because he's repeatedly nonstop has attacked Tesla over many years. And if you're somebody like me who has invested in Tesla for the past 3 years, you've been criticized quite a bit by people that read into reports like this. Now, for me, I took this winnings all the way to the bank. Now, Citron Research also just recently said this not even 2 weeks ago about NIO stock, and well, where did things go from there? But I can pull up a few different Citron Research reports or some articles about them that maybe you guys can understand that maybe there's a whole load of you know what behind this. Now, I'm not even going to go that far back on these Citron reports, but let's go to this article that was published by Benzinga on December 27, 2019, where the title of it says, Citron Research says Tesla shares are doing too much too fast. Now, it says down here that Citron's Andrew Leff said the stock may run out of gas in the near future. Now, if you were somebody that was invested in the Tesla on December 27th, 2019, you made quite a bit of money if you held that stock since then. Or this one, published on February 5th, 2020, that was on MarketWatch, where it says, famed short seller tells MarketWatch why he's betting against Tesla's casino. Citron's Andrew Leff says stock buyers should flush it as rally is just computer generated. This is why Elon Musk made Tesla shorts for sale on Tesla's store, is to make fun of short sellers. And for everybody who likes to invest into NIO, Citron Research also did the same thing to NIO stock, saying that they recommend investors to sell the stock, citing pricing pressure posed by bigger rival Tesla. They like to play devil's advocate. That's what they do here. And they said these things about NIO not even 2 weeks ago. Now, as you can see, the EV stocks have always been attacked for the longest time, as this is an industry that is growing, and there's a lot of money to be made by short sellers if they can convince people to follow what they're saying. Now, if you're somebody that has been looking into Blink yourself and done your own due diligence into the stock, you'd know that there's a lot more to Blink than just their charging infrastructure. Now, Blink has a ride-sharing company, which I recently talked about in a video not that long ago. And in this ride-sharing company, this is where, unlike Uber or Lyft, where someone comes to pick you up, this is one where the vehicles are placed in certain places and someone can just walk up, get the vehicle, drive it around, and then return it at any location so someone else can use it. And this is called Blue LA, and it runs in the Los Angeles area, and it is backed by the Los Angeles Department of Transportation. And Blink also does sell their own EV charging equipment where people can buy the equipment and install it in their house as well. So there's a lot more to Blink, like I'm saying here. So it's definitely worth looking into. I'm someone that doesn't believe in what short sellers say because, like I said, it's in their best interest for the stock to go down. So it's always worth looking into a company yourself and be comfortable with what you're investing into. Now, anyways, everybody, I'd like to hear everyone's opinions about this if you don't mind sharing. So as always, please like, share, comment, and subscribe. I have new videos coming out on my channel all the time. Thank you guys for watching. I will see you all in the next video coming very soon.